It is December 1st, 2021, and I'm back with another edition of the Wednesday Live Show. Last week, didn't do a show because it was the day before Thanksgiving, and I was getting ready for all the Thanksgiving festivities, and so I had a lot to do, and so I just didn't. Everybody was in holiday mode, so I figured it would be a good week to skip the show. It wasn't a whole lot to talk about, and so anyway, since then, there has actually been quite a bit going on, as you probably know. Uh, the past few trading days have been pretty wild. We're actually sort of, well, going into today, we'll jump to the chart real quick here. Going into today, we were practically in dip territory here, right? So, as I'm sure you know, yesterday, Jay Powell came out and said that during his testimony before Congress, said that they are looking at maybe speeding up the taper. And all of a sudden now, everyone's expecting that they're going to taper and they're going to hike rates. And he wants to remove the the transitory vernacular from talking about inflation, because inflation, as you know, has been going on most of the year. I think it was around spring, early summer, I think inflation started to heat up according to the CPI numbers. But anyway, so Powell spooked the market yesterday, as you can see. And prior to that, which was, well, let's see, yesterday was Tuesday, so prior to that, the market got spooked a couple days before that based on, I believe, well, of course, the new variant of coronavirus, right, came out on it was the half day of trading after Thanksgiving on Friday. So that was kind of crazy. And what's really odd about these past few days here, but look at that gap down between Wednesday and then it was Thanksgiving, and then big gap down on Friday, follow through, and then look at Friday's close, then look at Monday's open, right? And then so same thing yesterday, a little bit of a gap down. Jay Powell's spooked the market, and this morning we've got a gap up. And so looked a little dicey at first. As soon as the market opened today, it started pulling back a little bit, but it's some pretty crazy price action. So, what this is telling you is that they ran the futures up overnight, and last night they ran them up significantly. So, it's kind of an unusual environment, and I don't know if it's thin trading. Well, this was some thin trading right around Thanksgiving, but now we're getting into December, and seasonally speaking, this is the strongest time of the year, very strong time of the year, and so it remains to be seen. We've seen plenty of this type of price action before. Kind of news-driven sell-offs and dips, like back over here in July, same sort of thing. You had a big sell-off, lasted a few days, and then the market just rebounded and went on its merry way higher, right? This was a lot of noise here, like towards the towards the middle of September and into October. That was a lot of noise. I was actually, a sell-off that kind of lasted for a while, but then the market rebounded. So anyway, it's a little noisy right here, and it remains to be seen what's going to transpire from here. Let's go back a little bit. In May, we had a little bit of a sell-off. This year, we haven't had any significant sell-offs in the S&P anyway. So I believe that I saw as of yesterday, let me find my Russell chart here. Yeah, this is kind of interesting. As of yesterday, the Russell was down like 11% roughly from its highs. And so what's most interesting about this chart is that it spent most of the year in this box, broke out, and then like literally, right back in it, and it's in the middle of it right now. So The thing is I looked through a ton of charts, and I got to tell you, at least I'm gonna say, 3/4 of the stock charts out there just a mess. They look bad. I saw something yesterday that the top 10 the top 10 market cap S&P stocks represent roughly 30%, maybe it was a little, yeah, roughly 30% of the entire S&P in 10 stocks. And so, of course, once again, we're in an environment where the mega cap stocks are driving everything, and we've been there before. But and then you look around, and a lot of stocks just look horrible. I'll give you a for instance. I saw this yesterday. Look at AT&T. This is try and get a year to date chart here. So yeah, so you can see the beginning of the year back here. Look at AT&T. And I was thinking to myself, and I saw somebody post something that said AT&T hit a 52-week low, and I thought, well, that's kind of weird, you know. But I thought, well, how's Verizon doing then? I look at Verizon, and same sort of thing. What a mess. And just going through random charts, looking at different things. Obviously, like the airlines. Look at a couple airlines here. Up a little bit for the year, but not much. And of course, obviously the new variant, as they call it. Look at JetBlue, down on the year. So the airline sector is obviously started off the year with a big rebound, thinking that the vaccines and the pandemic and that was going to be over, and then of course, just when things are looking good, they all of a sudden there's a bunch of countries in Europe that are having lockdowns and different things, and I mean it's still a mess. We were kind of hoping it would just go away, but anyway, so there's still a lot of uncertainty out there right now. Um, so many stocks. On my other screen, I've got like sector lists up where it shows all the stocks in the sector. Like look at, well, Boeing. Boeing's typically an aerospace and defense stock, though. I mean, it's not just about, and Boeing is one of the. But so anyway, I think my point here is that while the major indexes, I should say, are having a spectacular year, your average random stock is not doing all that great. Disney. Oh, look, they're talking about something similar on CNBC right now. The sound off. It's like Disney's down. Look at that. Disney at a low for the year. This it's off 29% for the year. Caterpillar. Caterpillar off 20 something percent for the year. Looking nasty. The other thing is like look at Visa and MasterCard. I mean, so each one of these like big giant, blue chip stocks I'm pulling up here. Um, see what Apple looks like right here. Yeah, there you go. So all those big blue chip stocks that I was just pulling up are looking terrible, But yet, as I said, it's the top 10 stocks are holding up the market. So let's see. Oh, Powell and Yellen are testifying again today. Well, that's kind of interesting because everything was just fine yesterday until Powell started talking, and then the market, then things got pretty nasty there. So it's going to be interesting to listen to what they have to say today. So let's see. Bob Pisani says tech is expensive. Yeah, I got a QQQ chart here. Let me find that. Oh yeah. That's a good looking chart right there. This is since the pandemic low here, right? There was the big pandemic sell off. It just gives some decent perspective, and then all this is just an incredible rally off the lows. As you can see, the Qs, like there's 200, right? And there's 400. So, that's literally doubled since then, which is pretty amazing. But, here's your major trend line right there. And so it doesn't necessarily mean that it's going to sell down and touch it anytime soon. I mean, it could literally. Yeah, I have lots of charts where I draw like a trend line like this, and then it does something else, and that lower trend line, doesn't get revisited. So, maybe eventually it gets revisited, but just because that's the major support line doesn't mean that it's going down to test that. But anyway, I think this is an interesting chart to look at. From the pandemic sell-off to where it is now. Let's take a look real quick at. Oh, hang on. I need to switch my chart. I want to take a look at the semiconductors. I guess it's $SOX. Oh, $SOX. There we go. Semiconductor Index. Yeah, that's had a pretty amazing breakout actually. So there's the look from the lows. Big run up, and just recently, humongous run up. Oh, I did see something about, this is kind of interesting, the Dow, like I use a DIA. I guess I could use $DJIA. Well, that's not it. It's $INDU. There we go. Look at that. The Dow Jones Industrial Average, like literally tagged the 200-day moving average yesterday, which is pretty incredible. But I mean, that 200-day moving average, the blue line, is rising like really steep, right? And so a pullback to the 200-day. None of the other indexes are anywhere close to the 200-day moving average. But it's kind of interesting anyway, just to see the Dow. Like look where the 200-day is on the S&P, and look at where the 200-day is on the Qs, right? But to have the Dow like sitting practically right at the 200-day moving average is kind of interesting. So anyway, let's see. We've got we had one stock get stopped out in all this madness. Where did it go? It was, oh yeah, the CLR here. Yeah, unfortunately, this is a pretty good looking pattern here too, right? And so it triggered us in, and then literally, that's when the Thanksgiving Day massacre occurred, and so it just immediately stopped out, which is kind of a shame because, well, I mean, here's the thing: is the sort of triggering in was a little bit weird, and then of course, it's still kind of a viable pattern, but that little reversal there kind of threw a monkey wrench in things. So it's still possible that some of these energy stocks, continue to pull back a little bit and then reverse. Let's see, had another one on my list. IMO, but yeah, there's some energy stocks that could potentially be setting up. So we'll have to see. And so as far as pending trades go, we still have a couple. Although I will tell you this. So let's look at this Johnson & Johnson here is about to drop off the list. So I was actually kind of surprised that it didn't drop off last night, but it's close. Anything probably below this area here, and it's gone. So it's actually was setting up pretty nice to cup up there, but man, I was looking at medical and biotech stocks, and they're just a mess. They look really bad. So you see, I'm seeing a lot of death crosses too, where the 50 day is crossing below the 200 day. But these look at this biotech. I mean, this one, this XBI here, just a disaster. That is really an ugly chart. And then of course you put it in context. There's the beginning of the year, right? So a lot of stuff like ran up right at the beginning of the year, and there's a lot of charts that look nasty like this. So anyway, long story short, Johnson and Johnson is probably the next. I mean, it could theoretically bounce from here, but now there's a whole bunch of overhead resistance up here at the 50-day and the 200-day. So it won't surprise me to see this thing drop off the list because it's not set up anymore for this big cup up. And amazingly enough, this was the trigger line like since back over here, and there was no actual close over that trigger line, so we didn't get triggered into it, right? And so I will say that with this sell-off, that there's a pretty good chance that there will be some more stocks that are setting up. I mean, that's typically what happens is when the market's like bouncing around right up at the all-time highs, there's not a whole lot setting up because we're looking for, well, the system is looking for sort of long duration type of pullbacks. This is probably the best example of like, a long duration pullback that I've seen in a while. Um, yeah, and so, but I mean, here's the thing: is that this is getting a little long in the tooth here. I mean, originally this trigger line was a little bit higher, right? And this thing was having a nice sort of pullback. I guess if you zoom out far enough, um, it looks pretty reasonable. But and I'm not huge on moving averages. I mean they're useful in that, but just the fact that this thing's sold down and sitting right on that 200-day moving average is kind of interesting. So it'll be more interesting to see if it finds support there. And that trigger's moved down a little bit since it originally started, and so there's some potential here. So it's still on the pending list. If it were to drop out, if it were to break down more, then it'll probably be gone too. Right? So um, earnings season's about over. We're kind of headed into the holidays, but there can be a lot of action during the holidays. There really can, because like I said, it's the seasonally strongest time of the year, and so there's still a lot of potential. There's a lot of stocks that actually have halfway decent looking charts for breakouts, but there's not a whole lot that have this kind of pullback set up. So I mean, there's still some of the semiconductors still look pretty good. We looked at AMD before. Um, yeah, AMD's never looked back since their earnings, so that's pretty amazing actually. But let's see, there's some other ones. I saw somebody talking about this MRVL yesterday. That was a pretty nice little setup there. Micron. I think Nvidia has pretty much turned into the big blue chip of the semiconductor space. So I always like to look at SOXL too. See what that looks like. I'm sorry, three times long the semiconductors. Yeah, that's a pretty big year-to-date gain here from 30 to 70. So semiconductors are holding up pretty well. Let's see what else. I was going to look real quick around these. I was going to look real quick around the sectors just to see what the spider sectors look like. See if anything catches my eye here. So obviously XLE is comprised mostly of ExxonMobil, Chevron, Texaco. So you got to really look at XOP. Both of them, with the price of oil like ran up and it's dropped significantly. But anyway, those are kind of toppy looking patterns right there. So they don't look very good. Materials, these humps, these like hump type patterns, I mean, clearly it ran up and now it's in pullback mode. And so you can't just, when I see something like this, I mean, I don't really expect it to just turn right around and go back up, right? Although there's, look at back over here at the beginning of the year, it had a similar sort of hump and it did actually find a spot and just turn back around. But right now, it still looks like it's in pullback mode. A lot of these do actually. Consumer discretionary, kind of hanging in there after a big run up there. Let me go back to the beginning. There we go, beginning of the year. So yeah, just looking a little bit. Obviously it's had a great move this year, but looking a little bit suspect. Financials, recently they were like right up at the highs in that, but thing about the XLF is percentage wise, it just doesn't move a whole lot. It's a very low sort of beta type of thing, right? And so, like a rally from almost 39 here up over 40 on the chart, would be a big deal. I'm not saying it can't happen. I'm just saying that it's just kind of tame, to be honest with you. So this is the one, this communications one, this XLC is I believe like Google is in this thing, and they did a bunch of rejiggering on the stocks that constitute make up these indexes, and this one's really kind of weird as far as communication services, but that's got a pretty nasty look to it. So I think this is a bunch of tech stocks. This would be like the AT&T and T and Verizon, who would be in this one, I guess. Which are both sitting at year-to-date lows. But anyhow, yeah, this is looking pretty rough, as well as industrials, right? Industrials were like right up at the highs, and then just over the past, there's the Friday after Thanksgiving, right, and yesterday, and they're just sort of hanging around the 200-day moving average there. Not a real pretty chart, right? And the thing of it is, like at yesterday's low, you go back to like April of this year, and just hasn't made a whole lot of progress. So not looking so hot, to tell you the truth. Let's see, XLK Technology, obviously that's going to look pretty good there. Real estate, just going sideways. This is another one that doesn't have a whole lot of beta to it. The interesting one here is the XLU utilities, because obviously those are interest rate sensitive, and so as interest rates rise, if they rise, as they rise, seems to me that there's only two more. So XLP, yeah, this one got hit pretty hard here on this latest sell-off. It was right up at the highs, and then boom, you turn around a couple weeks later, and it's got a sort of a toppy looking pattern. So I don't know. The market, part of me says that we're in a seasonally strong time of the year, and the market should do well, and another part of me says that that everything's acting really sort of strange here, and that the majority of stocks and a lot of big cap blue chip type stocks, big name stocks or whatever, are just really looking bad. And so there's kind of and on a day-to-day basis, there's been a lot of negative breadth in the market, and way more new lows than new highs and that type of thing. So there's a lot of bearish divergences, I guess I should say, at this point. And so that makes me a little bit cautious. But then again, it's tough to everybody wants to buy everybody's looking for a pullback or a dip to buy, and so this time of year it's hard to be too bearish, but you never know. Everything was going along great until we got the news of this new new coronavirus variant, and then things started getting a little bit dicey. So prior to that, there was a lot of stocks didn't look all that great. So guess we'll just have to see what happens from here. So, um, and then you throw into the mix the fact that the Fed, now that Powell has been reappointed, I guess he's still got to get confirmed, but now that he's got reappointed, there's a lot of people out there that'll tell you that literally, everything, whatever the market does, depends on what the Fed's doing, whether they're increasing their balance sheet or raising rates or whatever, tapering, and so that's why. But now that he's been reappointed, um, yeah, he can lean a little more hawkish, I suppose, right? Because you know, obviously inflation has become a problem, and of course they're blaming it on the pandemic and supply chain issues and that. But the fact that they've realized that it's no longer transitory is kind of interesting. So anyway, we'll see what happens here. Right now it's a little difficult with all this like up and down craziness that we've seen lately. It's a little bit difficult to know exactly what to expect from here, right? I mean, when typically with these long range days, I mean, you can, on when you got a trend up like this, you got some lows of the day to work with and that type of thing. But when we have these type of gaps that we've been seeing, like a gap from there to there, and then a gap from there to there, uh, everything's just kind of up in the air, and it seems like any sort of bad news that hits the tape is an excuse to sell off. So maybe people or institutions are locking in some of the gains. It's been an extraordinary year, which wouldn't be surprising. And then you're going to have some tax loss selling. So, and then of course people getting ready for the holidays. So it's a little tough to know what to expect from here, but and of course all the divergences, right? Divergences and everything. So anyway, we'll see what happens. Still got a couple of pending trades. I would expect some more to be hitting the list relatively soon. And so thanks for tuning in. I will see you here same